Ladies and gentlemen, welcome back to Off the Block, the podcast where we focus less on speculation or short-term catalysts and more on the structural themes shaping crypto's long-term adoption, both everything on and off the blockchain. One of the big questions in the market right now is whether crypto is moving beyond hype-driven narratives and the more cyclical cycles that are shaping our industry and toward infrastructure that actually gets used. Payments are a great example. They've always been one of crypto's core promises and also one of its killer use cases, given the inherent efficiency benefits of blockchain technology. But for this to work at scale, systems need to be fast, reliable, low cost, and easy to use. And most networks struggle once they move beyond experimentation and into real-world usage. That's what today's episode is about. Rather than talking about price or short-term trends, we're focusing on infrastructure and why payments remain one of the most exciting use cases in crypto. Sui is a very interesting case study here. It was built from first principle engineers who previously worked on Meta's Diem project, where the challenge wasn't fighting an exciting narrative, but designing a system that could reliably operate at scale. That background shaped Sui's entire approach, whether it's performance, execution, or architecture. All things that matter once you start seriously thinking about building blockchain applications that are actually used by people and institutions. To unpack this, I'm joined by Adeniyi, co-founder and chief product officer at Mysten Labs, the team behind Sui that is building foundational platforms and protocols for a more decentralized internet, with a strong focus on performance, user and developer experience, and real-world usability. Pleasure to have you here. And why don't you tell us a bit about yourself before we kick off the rapid-fire questions?
Hey, I'm Adeniyi. I'm one of the co-founders of Mysten, as mentioned. I've been in the crypto space for a decent amount of time, since about 2012. I actually started off my career as a software engineer in the oil and gas space, then went over to banking, building trading systems and risk management systems for hedge funds. I then found out about crypto while I was at a major investment bank. I found that one of my colleagues reading the Bitcoin white paper. I looked into it and it was very interesting. Then I got the chance of looking at the code. I was very intrigued that the problem of having consensus using protocols was something that was actually done relatively well. And the idea of having money that was decentralized was very enticing. It lured me to the idea of decentralized systems. More than anything, the idea also, like, I knew how our bank works internally, the fact that from when you click a trade all the way to when it gets finalized, the amount of steps it goes through before it's actually finalized, and a lack of unified view of the world was actually a significant cost and barrier to entry to many people, right? So I saw an opportunity where, not Bitcoin itself, but the technology or the ethos around Bitcoin systems that verify themselves, and having the element of public auditability and transparency could be very key to the world of finance in the long term. So I accidentally built a company in the Bitcoin space, built a Bitcoin mining company, and built a big data company thereafter. Then I had the great opportunity at going to Oracle to help launch blockchain, and then VMware to help launch blockchain. And one of the favorite jobs I ever had, actually, beyond working at Mysten, was actually working at Facebook, or Meta as it's called now, working with Evan Cheng, Sam, George Costas, all my co-founders, right, in launching Libra. We were entrusted with the R&D, leading the R&D work for launching a new payment network called Libra. And the goal of Libra at Facebook was really to make it easy to send money, the same way as it was easy to send messages. The element of making sending messages free actually revolutionized the world. Right? The amount of commerce was able to be built, the amount of barriers of communication that were broken as a result, the reduction of the size of a world. Right? I remember the days when you used to send a text message and there's a cost to it, right? WhatsApp made it now free, and Facebook made it free, and now other institutions and other platforms exist today where messaging, to a large extent, beyond just email, right, is absolutely free. You pay for it in other ways, of course, right? What we felt was there was a big opportunity. If we could reduce the cost of sending money on the internet, if we can get it close to zero as possible, we can really revolutionize what can be built in the world. And that was a vision we had for Project Libra. We felt having anyone given the ability to open a wallet and start sending money to friends and family without a cost to it was a net benefit. And also, it would have helped Facebook business in the sense of cost of spending money on ads goes down significantly less as well, right? So there's an element of self-serving, but ultimately, long-term, there's a huge benefit to the world of having a payment system that was ultimately free. Yeah, we'd love to talk more about that. But yeah, it was a great experience at Facebook launching Libra. I think I had the time of my life, met the best people I've ever had a chance of working with, and I get the amazing opportunity of working with them day in, day out at Mysten.
I mean, thanks for the intro, and we're gonna ask you a couple more questions on your background. And I agree, because also myself, I started a business, like a startup, with people I used to work together before, and I think it's such a great experience to have. Adeniyi, I think you can read our mind, because you already answered the first question we would have for you, which was like, how did you first get into crypto? And you already answered it. So let me rephrase the first question I have for you. It's like, well, and I think I know the answer, because based on the time frame, I think there was only one choice. Yeah, I think it was only one choice, maybe 2 or 3 choices. What was the first cryptocurrency that you acquired?
There's only one choice. It was Bitcoin.
It is Bitcoin, but to be fair, I think already in 2012, you already had some forks like Namecoin. So it wasn't like the sole options you would have.
There are colored coins and all these other things as well, right? I went through the whole ringer through the whole process there. But yeah, Bitcoin was the first cryptocurrency that I got introduced in. Of course, there were like hash cash and other things before, but Bitcoin was like the first product I felt like really had the great opportunity of actually succeeding. I believe in the ethos behind it, decentralized money, decentralized gold, really believe in that idea. But the technology behind it is what really excited me more than anything.
And I think you also answered already the second question, but let me still ask it. What was the first blockchain network you actively used? Bitcoin. So you mentioned the Bitcoin mining, obviously, and maybe let's say as an actual user on chain.
Yeah, Bitcoin. I remember sending money to my dad in Bitcoin to try it out. He had no idea what was going on. He's like, this doesn't make any sense. I mean, when back then, you couldn't go to the bank, right? Yeah. You couldn't even connect your bank account to it, right? For the risk of getting completely shut off. But it was an interesting time.
And what would you say, because we talked already about your background at Meta, was the biggest lesson you took away from your time working on crypto at Meta?
I would say it made me believe a lot more in the idea of decentralized systems. You got to remember, I started off with the Bitcoin space and got disillusioned with the decentralized space because I felt that we weren't moving fast enough and things were moving enormously slow. The idea of like making Bitcoin faster was just not a thing. It was very difficult to get people to agree to that. But I just realized Bitcoin is going to be forever slow. Like it's not designed to be a fast network. It's designed to be a resilient network. It's never going to be a payments network for sure. It's really just money to a large extent. I went to the enterprise space because I believe that ultimately enterprise was going to push this direction where we're going to have fast decentralized systems. But ultimately, you got the problem of organizations wanting to own the piece of infrastructure, and largely, nobody could agree. You couldn't get any proliferation of blockchains in enterprise, right? So Facebook offered the first, I believe, real path towards that because they had a consortium model where everybody, to a large degree, already agreed that this is how we're going to launch the network. This is how it's going to be governed, and you already bootstrap the element of getting people in. Of course, that never launched, right? My biggest lesson from that was ultimately that conflating the need for a decentralized platform and conflating a new novel currency idea is probably not the right way to go. Right? There's the blockchain and there's certainly the stablecoin. I think the idea that Facebook went beyond just saying we're launching a global ledger, but then stepped into the realm of like, we're going to have this basket of currencies that may or may not be controlled by the US, but controlled by, this group of publicly held companies or private companies. It really hit a nerve. And I believe maybe launching with a dollar-backed stablecoin first would have been a sure path to success.
And getting to your most current project, Sui, what is one misconception that bothers you a lot about Sui?
So Sui is not just a blockchain. We've got to remember, before we left Facebook, we were working on something called Trove or Treasure Trove or Libra version 2.0. Right? Libra version 2.0 was meant to be this highly decentralized platform, faster than what we're launching with Libra version 1, that could handle Facebook scale transactions, truly Facebook scale transactions. And beyond that, you could also store data on it. So the idea that you can now have data fully decentralized, stored and owned by users, and centralized entities no longer are the arbiter of user data. That was the idea behind it. And that is really an embodiment of that. It's Libra 2.0 realized, namely it is Facebook scale in terms of transactions it can process. It's going to offer privacy, so you can actually send money with full privacy. So your bank account does not look like Twitter, like it exists in traditional blockchain today. And of course, sending money on this version of Sui is going to be free. In addition to that, you can store data on a Sui stack, right? It's not just a blockchain. You can store data on it from decentralized. You can encrypt data on it through decentralized. You can send value to friends and family on it through decentralized. You can email money to friends and family. They can claim it with an email address. It's really a programmable layer for assets of value that has never, ever been seen before. And we had the benefit of incubating that idea while working at Meta. But after leaving Meta, we're able to go a lot more faster and had a lot less restrictions in how we spend our time. But we've fully realized our vision now at Mysten Labs. So my misconception is really, we're not just doing the blockchain, right? Like, understand this is really a decentralized platform for the future.
I mean, I love this phrasing and I couldn't agree more. The last question I have on my side before handing over to Max is, what is one metric, key metric, that you're closely monitoring on Sui?
It's really going to be the amount of money being moved through the network, right? So people like to talk about TVL, but ultimately, if you think about what Sui is, it is a decentralized commerce platform to a large extent, right? People are going to do commerce on it, buy, sell, trade. You really want to care about the velocity of money in our systems. TPV, transaction processing volume, is going to be one of the metrics you want to really look at long term for Sui in terms of success.
Makes a lot of sense. I think, TVL, to your point, can be a bit of a vanity metric, if we can call it that. It depends, obviously. You need to look at it through specific lens and, these crypto native metrics that we have right now aren't always translatable from one crypto asset to another, so it makes sense in the realm of DeFi, but maybe not so much when judging Sui as an all-encompassing platform, as you mentioned. Anyways, our bad cop, Darius, he's done with all the questions, so now you get a little bit of a breather with me. And the first question I have for you is, what is one trend or one vertical that you think is still severely underappreciated in crypto?
Well, although it seems like all the hype, right? Stablecoins and AI, right? It seems all the hype. I still think people do not recognize how big this is going to be. I remember while at Facebook, one of the things we realized, not that we couldn't already see it, right? Like most internet traffic is going to be largely driven by bots, right? Agents acting on the behalf of users on a request. User makes a request, an agent scours the internet and makes that request known and done. Stable coins, like your agent's not going to be spending your Visa or Amex Platinum credit card anytime soon, right? For a world where you're paying micro cents for maybe querying for data or asking for a piece of information, that world of charging microtransactions using traditional rails, it just is not going to work. So I think what's going to be largely, and we didn't foresee this amazing explosion in LLMs and that people are using with Clawbot and everything else. Anthropic's done a great job, OpenAI. We didn't foresee it accelerating to this to this magnitude this early, but we're certainly ready for that, right? So you're going to see a mass proliferation of agents acting on a day-to-day behest and request on users. But more than anything, they're going to be spending money on behalf of users. They're going to be doing that in the most efficient rail possible, the fastest rail possible. And the users are going to care more and more about privacy. So when you send money to your friends and family, even with your agent, you don't want everybody looking at the history of everything you've done since you had a bank account open. So we're really gearing Sui to that world where agentic payments are going to be commonplace, but also agentic payments with the lowest cost possible. It's free to send money on Sui, in addition to doing that with full privacy. So that is the biggest meta, and I think that's something everybody should be really focused on. That's a space that's going to grow significantly higher than what we imagine today.
And this is a topic that we'll discuss later as well. So I don't know if you're reading our mind. I think Darius is right there, but love to talk about this in more detail later on as well. Relatedly, and I assume, this is agentic payments and stablecoins, generally speaking, are a venue where we see the most institutional adoption. And how do you see this evolving over the next few years with maybe Sui in mind specifically?
Yeah, ultimately, agents are making decisions on behalf of users. Agents are going to look for the most optimal path to send money for you. They're going to look for the safest way to send money for you. They're going to look for the fastest way to send money for you. And in that world, you have to be faster, you have to be cheaper, you also have to be private. So for Sui, what that means is, one, it's going to be cheaper because sending stablecoins on Sui is going to be free. It's going to be faster because the latency on Sui is by far the lowest in the industry. So I can send money to people in 300 milliseconds with 25 milliseconds confirmation. And also you're going to need privacy. You cannot have mass scale adoption of anything consumer related without privacy being at the forefront. Today, when I wire money to friends and family, I don't have to worry about them being able to read my transaction logs or history from my bank because that's private information. Today's architecture in blockchains, we have the amazing benefit of transparency, but that transparency comes at a cost because now users have no agency to hide their information, right? So what we're launching on Sui is a fully regulatory. You also have to work within the realms of what regulations would allow. A means for users and agents to transfer money on chain without exposing balances or transaction history, which I think is critical for any kind of adoption. So in a world where we go fully agentic, agents are going to make that decision. And I think Sui is going to be the best place for agents to transact on behalf of users because those primitives absolutely are key. It's one thing to do transactions for free, but can you do that transaction for free at scale? This is why like the engineering work we did at Facebook and the background and working at high scale systems come to play, because you have to be able to deal with 100,000 transactions per second, but also scale up that demand if needed, right? I always say it's a red herring if anyone starts to talk about max throughput, because that doesn't exist in the Facebook or Google world, right? What do you mean maximum, right? You add more hardware and you scale up, right? So that's the world we come from. So it doesn't have a max throughput. You add more resources and it scales in relation to the amount of hardware you throw at the problem.
You kind of already answered the next follow-up question, and I assume the question was, do you see on-chain payments as inevitable or an open question? And I do think you see it as inevitable.
It's absolutely inevitable. It's inevitable for a number of reasons. Stablecoins are just going to be more efficient way of doing business than wires or other means. They're expensive, they're slower. Means that exist today are slower. You're actually finding a lot of banks are now, you find the fight around any kind of stablecoin regulations with banks involved because they're aware this is a means to an end, right? It's beneficial. Consumers are going to request or require money to move a lot faster than they move today. They're going to require a lot less cost to transacting. Stablecoins are the antidote to the crazy systems that exist today. So I think on-chain payments, on-chain finance is going to be, in the big scheme of things, the default way that people transact on the internet.
Agreed. And you touched upon this earlier as well. Again, you're a mind reader. We already know that much after, 15, 20 minutes. But nevertheless, one of the reasons that institutionals have been hesitant about blockchain is that double-edged sword a bit about privacy. Nobody wants to have their competitors watching their financial data in real time, right? But I think a lot of the solutions as of now to tackle this burden of privacy or confidentiality haven't really been met with open arms, whether it's regulatory or also not from institutionals. So what is Sui doing nowadays that positions their attempts at privacy differently to competitors?
Yeah, you've got to realize that there are different levels of privacy that matter, right?
Mm-hmm.
Today, if I transact with my bank is aware of my bank balance, right? They're my bank. They custody my money. I transact, so the bank's aware of the balance I have. But by no means will they go and share that with my competitor. Will they go share that with people I transact with? That is a relationship out of my bank. It's sacred. People understand that very, very well. But when you transact with the internet today, or when you transact, with blockchains today, that is null and void, right? You send money to someone and instantly they can, without even knowing it, you're giving away all your transactional, the history of records of transactions you've ever done. In that world, especially when you think about institutional finance, right? Like I can look at the trades you've done. I can look at the positions you have. I can hedge against you. I can take you out, right? I can literally harm you as a competitor by knowing your balances. So there are different levels of privacy that matters. There's an element of, hey, consumers actually care about hiding their balance from people they transact with and the mass internet, right? Like a consumer does not want you showing their history, but certainly they might be okay with an issuer or regulator having that visibility because they need to do AML sanctioning, money laundering laws, and everything else that's required. But consumers certainly does not want their friends and family knowing the history of transactions, right? So been working extensively with analytics companies, with exchanges, custodians, and issuers on means of getting privacy onto Sui. And in April this year, you'll be able to have on-chain privacy where you can hide the amounts and balances that you transact with on Sui. The other difficult thing is no one has been able to do, well, beyond the fact that no one's been able to do privacy right in a fully regulated way, and we figured that out by working with the right partners, but it's to do that at scale, right? It's one thing to have privacy, but then if it starts to cost you a lot more to do a private transaction, you might just opt to do a non-private transaction, right? So your privacy, it comes at great cost, right? So that is also unacceptable. We've been able to also, in addition to making privacy first-class citizen on Sui, we're also making it possible to do private transactions for free on-chain as a first-class citizen too. So you have the same scalability in transacting, sending money to friends and family, doing it for free of charge, and also maintaining privacy. So it's the element of doing it at scale with a full scheme that adheres to the rule of law is actually very, very important. Now, that is when it comes to stablecoins. For RWAs and other assets, the privacy laws might be completely different, and Sui is very flexible to optimize for whatever the rule of law is for a particular asset classes. And it's all programmable, so issuers can build these rules in as to who's allowed to trade, who's allowed to transfer, who can print, who can burn. These are things that the smart contract layer does for you natively.
I have a side question actually for our audience. So L1s, usually they finance themselves through transaction fees. Okay, you just said that the transaction is going to be free. So what's the model and thinking behind this?
Yeah, if you think about it, right? Like, so why would you want to make transactions free on a blockchain? The thought process would be, wait, don't you want to earn all the revenue for the network? Our view is as follows. You make transactions free, the network will make money in other ways. For example, Sui is unique in the sense that it's going to have it's launching its own native stablecoin, and that stablecoin itself generates yield, and that yield goes back into the ecosystem. So you don't really care about transaction fees as long as you generate enough float in the network to subsidize any cost of transacting. Also, transactions are free or very, very low cost, right? So for us to do 1,000 transactions and 20,000 transactions or 50,000 transactions, it's not a linear cost. It's a tiny incremental cost in supporting higher tiers of throughput on Sui than it would be on other networks. So we built this network for scale. It can handle hundreds of thousands of transactions per second. You double the hardware, you double the throughput. So the net cost of transaction on Sui is very, very low. So if you're going to send money to friends and family, no cost at all. Now, if you want to build a very complicated AMM and DEX that does, very elaborate things, there'll be a cost there, but it'll still be cheaper than traditional chains. I think more money can be made in the applications that build on chain than trying to tax people for sending money, which I think money movement, it's your money. You should pay to move your money on the internet. So that's the ethos we've chosen, the approach we've taken. The network will make revenue off stablecoin floats that we generate that will go back into the network and buybacks. And of course, the applications on Sui would generate fees from building applications of value that users would want to transact with.
Makes sense. I mean, kind of aligns with our view as well that value accrual will move up the stack, up to the application layer. And if you build that moat or that kind of infrastructure or foundational layer where it is easier to build these applications from the ground up, obviously you kind of build an inherent competitive advantage there. I was just happy that I wouldn't be sniped on the Sui blockchain anymore. But nevertheless, all jokes aside, final question for you before we move into the body of the episode. But if you had to describe Sui in one word right now, what would it be?
Oh, man, one word. I don't want to use the word fast because that's just expected. I would say it's ready. Is what I'll say. It's ready. Let me explain why I say it's ready. We had the benefit of not being first to launch a blockchain. We at Facebook, we actually looked at Solana, we looked at ETH, we looked at Bitcoin, we looked at all sorts of programming languages as well. In addition, because we had to build a system that we could go to regulators with and say, here is this regulatory ready network. It scales, it's secure. We can guarantee that the smart contracts are safe. We have a language that moves money, and we feel really strongly about it because trillions of dollars are going to sit on it, right? When you're faced with scale, you have no choice. You have to go to that level you have to build to that level of quality to deliver something that can scale with your business. We have that benefit of learning from what others have done, and we're able to build from first principles, as you said earlier, and not making any excuses for writing something that just doesn't work. Like, we built this network from day one with the idea of scale, with the idea of powering billions of users. We want billions of Facebook users to be on this very soon. We'd want anybody transacting on WhatsApp to be able to send money on Sui. We want anybody using TikTok, anybody using a gaming platform to leverage Sui in a back end for free. And we built with that in mind, knowing where the world is going. We built with that in mind. And we're reaping the rewards because we can release things a lot faster. So it's ready for this agentic world because we knew that's where the world is going. It's ready to take on the scale, the millions of agents that people are going to use. You personally will probably have 20 agents yourself that run on your behalf on a day-to-day basis. So it's going to be a world powered by autonomous systems, and we have the system for autonomous systems, so we're ready for that.
Right. Well, I now want to move a little bit into the background of Meta, and we obviously discussed about the work that you guys were doing over there, a lot of exciting different verticals, but it's really that point that you mentioned about having, ready consumer grade infrastructure and that kind of mindset that was instilled in all of you guys at Meta, because obviously, generally speaking, their focus on user experience, whether it's through all the social media verticals that they operate on, I think that's quite a potent point, because ultimately, to onboard the next wave of crypto users, let's say average Joes, the user experience needs to be at least at par, if not better than legacy systems, right? We mentioned cost, we mentioned this, but ultimately for the everyday person, when these costs are so hidden in legacy systems, they only care if they're incentivized to switch because it's easier. Or what's the view from your team on that side?
Yeah. I always made the point that Web2 spent billions and billions of dollars in building good user experience. And crypto came along and thought, screw all that. We'll just force users to do new things. For example, we'll force users to go and buy gas before they can transact. We'll force users to go and download something called a wallet and then remember some alphanumeric nonsense that they don't even know how to secure long-term, right? Crypto came with a lot of ideologies that force people to change the way they behave, which doesn't work for the mass market, right? Like it ends up becoming a very niche product if it cannot live up to the level of experience that consumers are accustomed to. So at Meta, we agonize around building this thing the right way because we ultimately had to cater to 3 billion Facebook users. We can't tell 3 billion Facebook users overnight, hey, folks, by the way, you're going to be able to trade or spend money on WhatsApp. But to do that, you need to go and create this thing called a private key and you need to store it under your bed or a mattress or in a vault or whatever. That just doesn't fly. So we're building something at Meta called money orders, right? The ability to just send money to someone and have them claim it without having to need a wallet or cryptographic primitives. We're able to perfect that while at Mysten. It's called ZK Login, right? So with ZK Login, I can use any identity I have today, my Google account, my Facebook account, my WhatsApp account, whatever. I can use that as a way to transact on-chain without ever touching private keys or any cryptography whatsoever. What that allows you to do is to email money, text money to people, and they don't need a wallet to claim it and to spend it. So it's very unique. It's something that only we can do. But that is now talking about user experience from a user perspective. A user does not need to go and buy gas to send their first transaction. They'll be able to just simply transact freely, especially if it's stablecoins, transact freely without ever have to think about the idea of gas. So UX matters, and especially if you go into a world where billions of users are going to be touching stablecoins, we're going to be changing the world, right? We're basically changing the underpinnings of how people do finance. And for that, you need to onboard them with the same primitives that they're accustomed to doing today. That's why we invest a lot of money at Facebook in building good user experience and other companies like Google, WhatsApp, like whatever. And we're taking those learnings and we're building into the infrastructure.
I mean, nothing was more frustrating for me than my early days in crypto when I didn't know what gas was at the time. And I was like, what do you mean I don't have enough gas? Like I literally just topped up I need it in the native currency. And that doesn't fly, as you said, whether it's for 3 billion people already onboarded on WhatsApp or whether it's for the future users. And I think that's something that you guys continue to show. I mean, this is slightly different, but you guys also have built a hardware device, which is maybe more centered around a different vertical.
Yeah.
But it does show to me that Sui's, your attention to making blockchain technology as accessible as ever and actually physically in the hands of millions, you essentially abstract away all the technicalities of this new technology. And I think that's a very salient point and something that should help you stand out versus peers going forward.
I agree. And actually, I want to move to another topic, which I think is very exciting because in our opinion, it's like besides speculation, main use case in crypto that found product market fit, which is payments and stablecoins. And obviously also something that you guys at Sui are very much paying attention on. I was wondering if you could tell our audience, what's your vision for payments on Sui? How do you see the space evolving? And also tell a little bit about your stablecoin that you're now issuing.
Yeah. So our vision for payments on Sui is, number one, I'd say, let me talk about like our principles, right? And we'll go into vision. Principles is money should be free to move on internet. Consumers have long been robbed by being charged development fees to move money on internet. That should go away. It should be free. So to swap between currencies, you should pay the minimal fee possible. It should be an open market, not this, opaque nonsense we get today. I should be able to swap GBP to USD as cheaply as humanly possible and as quickly as possible, and should be delivered instantly without delay. That is a principle we care about. And in that world on Sui, where money is free to move and privacy is key, and then you can do FX swaps for as low cost as possible, you then can build amazing financial ecosystems on top of Sui. So that's what we're going towards, right? If you have a layer that moves money for free, you have a layer that makes sure your privacy is secured, and you can move in and out of currencies as quickly as possible with deep liquidity, then people can safely start to build amazing financial ecosystems on top of Sui. That's the world we envision. It's what we really believe that Sui's well set to do really well. And as I mentioned, agents are going to trade for you. They're going to invest for you. You're already seeing Anthropic makes an announcement and then stock prices go down because some industries being, changed, right? I've made this point that fintechs exist today. Many fintechs exist today because there's some inherent friction that they're charging you for solving. So they exist only because there's a friction that they're sitting in between and they're monetizing and they're charging you for. In this world we're going to, a lot of restrictions will be gone. And I think many fintechs will fail to exist, or will have to pivot to new models of offering value. And that's a net benefit for the world, in my view, right? So in a world where money is free to use and money is free to transfer, people can build new applications. I think it's going to open up a level playing field. And I think DeFi will eat CeFi in that world as well.
And you just mentioned applications, and I'm just curious, like, which one do you think will gain the most traction? Like, again, talking about payments, stablecoins, if you had to make a guess, like, which one do you think will get PMF first?
So stablecoin's already there. I see stablecoin almost as a piece of infrastructure, right? Like it's states, right? Lets you move the money around. But one product on Sui, for example, Beep AI, is built by some ex-PayPal builders. They have an agentic system that automates your investments for you, optimizes your portfolio for you, auto rebalances in DeFi for you without ever having to touch your line of code or understanding how DeFi works. So I think things that will get product market fit are consumer applications that onboard users into new investment opportunities without having them to jump through the loops of learning about DeFi and all the complexities that come fall through it, right? That's where the TMF is going to be. Agents that will help you optimize your stock portfolio, invest, do your auto deleveraging that needs to be done. Finding the right bond for you to invest in on chain, find the right stocks to invest in on chain, listening to the stream on Twitter and sentiment that's being pushed by Bloomberg, and then making investment decisions before earnings calls, right? These are the things that traditionally were managed for you by financial advisors. I think this world where you can automate a lot of these processes using agents, these are the kind of things that will get PMF. It has to be something that simplifies the investment or the day-to-day use of money for consumers for it to take off.
But the last question I had on this regards, obviously, like AI agents, they bring a lot of advantages. Independent, if you're new to crypto, if you're crypto native, they automate a lot of stuff, monitor 24/7, etc. Like humans cannot compete. But do you think it really gives an edge? Because I think down the line, everybody going to use an AI agent. So if everybody uses an AI agent and they mostly are the same agents, like, isn't this like, what's the edge then down the line? Like, how do you see this developing?
So I think what you're seeing with this proliferation of agents is a world where we're shifting more towards personal software, right? Rather than, a company builds one piece of software for 50 million people to use. Others can make more custom decisions about how software works for them. I do believe that world is almost here. For example, my son is built something that teaches him algebra. He doesn't need a tutor for some of his algebra classes anymore, right?
Does he need algebra at that point?
Yeah, that's actually a good question, right? Well, he has to pass his test, so he has to do algebra. The question is, how long do we need to continue to pretend that schooling is the right way to go? But that's a different debate all day long as well.
We don't have time for that.
There's a world where, software is going to be largely tailored towards the needs and demands of people, right? So of course, it might not mean it's the best software, but it's the best for you because it's customized with knowing you very well and then making optimizations based on your past queries. World, I'd like to think agents still need to make payments. They still need to invest. They still need to get guarantees on money movement. They still need to get guarantees on privacy. They still need finality. And blockchains are very well place to do that. I don't think centralized agencies are going to be the way to go there, right? So I always say agents can't do contracts with AWS or Google, right? But agents can do contracts with autonomous systems. And autonomous systems are going to eat the world there. So I think that element of automation, that world of mass automation, is going to be greatly helped by decentralized platforms and blockchains as well.
I mean, fully agreed. I think if you look at the history of technology as well, open systems and that ability to scale up the stack in terms of technological advancements, they always beat legacy systems or closed systems. We had email that replaced postal monopolies. We have HTTP, which replaced the early internet, walled gardens. And now with payments and agents, you're seeing the same thing for the old financial rails. And I guess now I want to shift into looking forward as we move towards the end of this podcast. Is I imagine, as you said, for a lot of these fintechs or a lot of these merchants, the choice is ultimately between adopting a new technology or being left behind. Yeah. And going forward, do you see payments really as a long-term driver for the SUI network in terms of adoption? I would assume so.
Yeah. I mean, the long-term driver adoption for SUI network is going to be payments. And strongly because I believe we are best set to win payments. And for a number of reasons, right? We are the only network that can actually scale to the needs of a global company like Facebook or Google or Microsoft, because we have the only infrastructure that's been built with them in mind. Namely, when we scale, even in AI, right? When we scale in AI, when we scale in infra, we need to be able to add more hardware to our budget in order to get more scale. All blockchains today work in the idea of finite block space or finite resource. Block space is a finite resource. It's like gold, right? That's why we pay more when the network is busy for transacting. On SUI, block space is infinite. So we can create more block space. We add more hardware to create more block space. So it's ultimately cheaper to transact. So I feel in a world of payments, you cannot tell somebody, because the network is busy, you're going to have to pay me 500% what you normally pay to transact because someone is minting meme coins. That doesn't make any sense, right? Like, what has that got to do with Jack, who needs to make his mortgage payment, or Sam, who needs to pay for Badal, right? Like, that world is fanciful. So we are very well set in a world where the network gets busy, the hardware, the network adds more resources and keeps fees at zero, right? So at the same time, we're very well set for privacy. We can handle privacy at the scale that's demanded by large institutions and also what consumers want. And beyond that, SUI has something very unique. And I don't want to go into the technical details here, but it has something called programmable transaction blocks. And what that really means is a fancy word for, it lets you take any number of applications built on SUI and string them together as one application and execute them at the same time. This is very, very unique. So I can take a payments app, I can take a trading app, I can take, a custody app on SUI, and I can string them together with one call and execute them at a single time and instantly final zero, very, very low cost, right? So that is impossible on other networks today. So that is a unique element if you're going to the world of agents, because what are agents doing? Agents, when you make a query on demand, are building apps for you. They are effectively learning what you're asking them to do and coming up with a solution dynamically to meet your demand. And in that world, they need to be able to piece apps together and execute them at the same time. So they can't go and build something new and figure something out every single time you make a query. There needs to be a way for them to piece out what's available on the internet beyond just APIs and to do that. And I think we are very uniquely set up for that world. So it's something called programmable transaction blocks, very, very unique. It lets you do something called atomic transactions across any number of apps in the ecosystem. So in that world, I think we're ready for AI. We're ready for payments. We're ready to do payments from a scale perspective. And I think the way you look at SUI success is you start to look at the stablecoin flows. Once it's, you want to look at the amount of stablecoin volume that gets driven on SUI once free tier transactions go live this year.
I think maybe before we wrap it up, I have one last question. If you had to make one prediction, because obviously we as researchers, we constantly have to make predictions, price prediction, New Year's predictions, whatsoever. If you had to make one prediction for SUI in the next years, let's say 1 to 2 years, 1 to 3 years, what would it be?
Agents choose SUI. That's my prediction. As I mentioned before, agents are going to choose the fastest, cheapest, optimal path to execute transactions on behalf of users. And that's going to be sweet always, every single time. It's always going to have capacity to meet the demand. It's always going to have free tier for moving money on the internet. It's going to have the atomic ability to string apps together and build them and execute them at the same time. And it's going to be able to guarantee users privacy. So these are the things that are really going to matter long term. Usefully.
And I think this is a great end to our podcast. Adeniyi, thanks again for taking the time to be on the podcast. It was very interesting. I mean, I think we talked about like a lot of interesting things, like your background at Meta or formerly Facebook. I think it was Facebook when you joined still, right?
Yeah,
and then they changed your name over to Meta, about Sue's focus on payments, privacy, but also the agentic economy. And also that you're not just like, let's say with some people might think like just focusing on gaming or like specific verticals, but actually payments and some of the biggest verticals within crypto. It was great having you here. For our audience, as always, please leave a like, share, comment, and follow us on YouTube and Spotify. And hopefully see you next week at next episode.
Thank you.